If you're retired or getting close to retirement and you're concerned about market loss, you may have considered purchasing an annuity. Here's a question you should ask yourself before you start looking into annuities. Can the interest from my savings provide enough income to last me throughout retirement? And if the answer is yes, you don't need a lifetime income annuity because it draws down your principal. I'm Angie Welsh from My Annuity Agents, and today I'm going to teach you how to use an annuity to provide income during retirement without drawing down your principal. One of the most underutilized financial tools on the market is a multi-year guaranteed annuity. This is a short-term annuity designed to compete with bonds and CDs. The reason they're so underutilized is because you obtain a MYGA through an independent insurance agent like me. Insurance companies that offer MYGAs don't have brick-and-mortar buildings with account representatives where you walk in and sit down and open your account like you do at a bank. This is one of the reasons annuity companies can offer higher interest rates on MYGAs than you typically get with a CD. But independent annuity agents offer a variety of products. Guess which one pays the very lowest commission? You guessed it, multi-year guaranteed annuities. MYGAs pay about a third or a quarter of what a long-term fixed indexed annuity with a guaranteed lifetime income will pay. So your agent may conveniently skip over a MYGA and direct you to a longer-term annuity with a higher commission, when a MYGA would really serve you better. I want to show you the difference by comparing these two options so that you don't end up locking up more money than necessary and drawing down your principal that you would rather leave to your beneficiaries than have the annuity company gobble it up. This strategy also gives you more options in the future because your principal stays intact. Here's an example of a real couple who called me a few weeks ago after they had purchased a $1.2 million fixed indexed annuity with a lifetime income rider. They had had it for about 3 years, and they chose it because the agent who recommended it to them had focused on the fact that they would get $95,000 of guaranteed joint lifetime income starting in 5 years when they retired. This would continue for both of their lives. But the agent just glossed over how the cash inside the policy would likely only grow at about an average of 4%. And that's before the 1.5% income rider fee that was deducted from the cash value every year. They were 3 years into the 5-year delay before they started income. So they hadn't taken a single withdrawal, and during that time, the account value had only grown at 2.5% on average, less than what they would have earned in a money market account. And they weren't happy, so they reached out to me asking if they had made a mistake. My first question was whether the previous agent had completed an income analysis with them. The answer was no. Now, if they had completed an income analysis and determined that they really needed $95,000 to maintain their lifestyle when they retired, then I would have given it my stamp of approval and told them that they made the right decision. But they said they hadn't talked about their income needs at all with the agent. And they didn't really need anywhere near that much extra income. They really only wanted about another $1,000 or $2,000 a month for travel and other non-essential fun items. They had no debt, and their combined Social Security would cover all of their living expenses. But they chose the fixed indexed annuity with the income rider for 2 reasons. They wanted extra income, and they were concerned about the stock market losing value. So the agent showed them a product that met both of those goals, but also paid him the highest commission out of all of the products that could have worked to solve their problems. It's true, the cash value will not lose money inside of the fixed indexed annuity with an income rider, but he glossed over the cap rates and fees that limit the account's ability to grow. And when they turn on income, the cash value will quickly draw down and be gone in approximately 15 years. It's true that the income will continue for both of their lives no matter how long they live, but it's income they don't really need. An agent who wants a higher commission will say, well, what about inflation? You can start a lifetime income annuity sometime down the road if you have protected part of your principal. Keep control of your principal unless you really need the higher payment from a guaranteed lifetime income annuity. Now let's take a look at a MYGA strategy that would have paid a much lower commission, but would have still provided them with extra income and market protection, and something the agent conveniently left out, keeping their principal intact without drawing it down. So instead of taking $95,000 in income that they really don't need and reducing their principal balance down from $1.2 million to zero in approximately 15 years, they could have used a guaranteed fixed rate MYGA. Their objectives were simple. They wanted some extra income and they wanted protection from market loss. They could have used a 10-year MYGA, which is currently offering a 5.4% guaranteed fixed rate with no fees with an insurance company that has an A++ financial rating. This is a guaranteed rate that's available at the time of this taping, which is July of 2026. And rates were comparable 3 years ago when they purchased this lifetime income annuity. But the agent at the time did not give them the option to use a multi-year guaranteed annuity to protect their money from market loss. Their balance would grow from $1.2 million to nearly $1.6 million during the 5-year period they were waiting to take income. And then after 5 years, they could withdraw $84,000 a year in interest income from their MYGA without touching a penny of the principal. And at the end of the 10-year period, they would still have $1.5 million liquid with the MYGA strategy. They would keep their principal intact. You continue to own it. You have control of it. At the end of the fixed rate period, you can renew it, move it to another MYGA with a higher interest rate, or if rates are not competitive, then you consider a lifetime income annuity. They're based on your age, so if you delay, you'll be older and you'll get more money. Now, will interest rates always provide enough income? Not necessarily. But that's why it's important to do the income analysis. For example, if you only need to withdraw $15,000 or $20,000 from your investments to maintain your standard of living, a MYGA may be your best income option because it allows you to keep your principal intact without risk of market loss and without drawing it down. On the other hand, if your income needs are much higher, or if you just want the simplicity of a guaranteed income no matter how long you live, and you're not concerned about leaving money to your beneficiaries, then a lifetime income annuity may be the best option. The point is this: if you want market protection and extra income during retirement, don't assume a lifetime income annuity is your only option until you've done the math first. Too many people purchase an income annuity simply because that's the only option that was presented to them. Lifetime income annuities have some great features, so they look pretty good. But what if you found out there was something better? An annuity agent should show you both options. If the interest from your savings provides enough income, it's a better strategy to keep your principal intact, which means it's available for future use or to pass on to your heirs. That's why every retirement plan should begin with first a sequence of returns risk report and an income analysis. This helps us determine whether your portfolio can withstand market downturns while you're taking withdrawals that you need for income. If you can, then protect a portion of your funds in a MYGA so that your principal remains intact. If you can't, then we can compare the top income annuity options from dozens of insurance companies to find the one that best meets your needs and has the highest income payout. When you shop for an annuity, it's about finding the guaranteed income you need while still maintaining as much control over your principal as you can. You can add guaranteed lifetime income annuities down the road if you need to add extra income because of inflation. That's exactly how we help our clients, and it's why we continue to receive stellar consumer reviews. If you'd like to know whether living off your interest from a MYGA could work for you, or whether a lifetime income annuity makes more sense, I'd be happy to help. Click the link below to schedule your free consultation, and we can complete your sequence of returns risk report, and I'll walk you through your income needs. It may be the most important retirement decision you make because it helps answer this question: do you really need to give up control of your principal? Or can the interest from your nest egg provide you with the income you need? Finally, if you found this video helpful, please like and subscribe and share it with someone you know who is approaching retirement.